welcome once again Sanjeev Maheshwari ji as well as the speaker of the first session, CA Vinit Jain. I'll request Sanjeev ji to join us and light the lamp. Request Vinit ji also to join.
शुभं करोति कल्याणम् आरोग्यं धनसम्पदा शत्रुबुद्धिविनाशाय दीपज्योति नमोऽस्तु ते दिव्या दिव्यारे दीपत्कार काने कुण्डलमोतिहार दिव्याला पाहून नमस्कार तिळाचे तेल कापसाची वात दिवा तेवे देवा पाशी उजेड पडे विष्णू पाशी माझा
Friends, before we start, I'll just give you a brief. We are thankful to WRC who has arranged this joint seminar at Borivali after a period of almost 8 years. This is mainly, we are also thankful to the chairman of WRC who has allowed us, and for the benefit of the members who are staying in the suburbs who cannot visit WRC for the full day because of traveling. So once again, I, on behalf of BCSC, thanks WRC for organizing this full day seminar at Borivali. Now I'll request CA Vijay Jain, our past convener, to introduce the keynote speaker, Sanjeev ji.
Good morning, members. It's my pleasant task to introduce our keynote speaker, CA Sanjeev Maheshwari ji. He has qualified as Chartered Accountant in the year 1985 and was a merit list of CA final exam. He is registered with the Insolvency Professional, registered with the Indian Institute of Insolvency Professional of ICA. He is the partner in Messrs. GMJ and Company Chartered Accountant and focuses on management consultancy, project finance and audit. He has been a member of various technical committees such as Audit Assurance Standard, AASB, Peer Review Board, Board of Studies, and many other committees of ICA. He was a member of the Quality Review Board constituted by the Ministry of Corporate Affairs. He was a member of the Accounting Standard Board of the Institute of Cost and Work Accountant of India. He has been a member on various committees of South Asia Federation of Accountants, SAFA. He was the chairman of Western India Regional Council of ICA for the year 2005-2006. Under his leadership, the WRC was awarded the best region by getting 6 awards by the ICI. He has presented many papers on accounting standard, audit-related subject at various seminars at ICI, WRC, its branches, and various study circles. With this brief introduction, I request a past convener, Sharad Sheth, to present a memento to the learned speaker as a mark of a love and affection. Now I request the speaker to take charge of the session. Thank you.
So good morning, everyone. Good morning. So it's indeed a privilege for me to be here this morning, third week of March. All professionals gearing up for the bank branch audit. And at the outset, my compliments to AASB of ICI, that is the Auditing Assurance Standard Board, which sets up all the standards of auditing for us, the WIRC, and the study circles here, Borivali CP Study Circle, who has been doing a phenomenal job for the professionals here. And I think this concept of having the programs closer to the residence of members and closer to the offices of members by the WIRC, by the institute, is really helping the members to attend the programs in large numbers and at a convenient place, because in smaller cities it's okay to have a program close to the branch of premises, but in Mumbai it's the CP study circles actually help in deploying or disseminating of knowledge across the professionals and the young students. So compliments to them. Most of the time when we have these programs, we have programs around income tax, GST, where everybody attends. But bank branch audit seminars are typically, statutory bank branch audits are programs where it has its prominence once every year, and you have one set of professionals who would be there, who are in those 4 years of bank branch audits, and quite a few people are also in the cooling period and then actually try to get into the next line of allotment of work. So when the chairman Ketan Sayya was discussing with me about this program to be held on 22nd of March, I was wondering whether would it be premature in terms of, because nobody knows for certain when the branch audits will happen, branch audits will be allotted. And this year too, I think at this point of time, the Reserve Bank of India has released the list of the panel only on Wednesday evening, and the banks have now started shooting out letters to the, first is to those branch auditors who are already in their continuing members, continuing auditors, and then thereafter the second leg would be in terms of the new allottees wherever there are vacancies. So I assume that a large number of participants here are those who have either got the bank audit for the first time or those who have been on the panel and are expected to have this audit this time. So my compliments to you that you all are fortunate to have the bank branch audits, because if you look at the ecosystem in terms of the audits, there is a huge gap between the demand for the branch audits and the supply of the number of branches that are available for audit. And this is one segment of our work which may or may not remain with us for a very, very long period of time. It has been there with us for some time, but I think as things are evolving, things are going to keep on changing, and I think we should keep our fingers crossed in terms of how this will be on way forward as there is more and more use of technology at the banks. So I have been fortunate to have a look at the professional from both perspective, because I was, not only am I a practicing chartered accountant, I've been on the Central Council for 9 years, and thereafter I was on the board of State Bank of India for 3 years, and currently now I'm on the board of Indian Bank for the period of 3 years. So that has given me also an opportunity to see the expectations from the other side. And it is not only that as a professional what we see and what we internally evaluate is one bit of it, but how the bankers also look at us, I think that is also very important for us. So before we go through the technical sessions during the course of the day, I think let's try and look at what is the economic landscape around us, where we were as economy, where we are today, where are we going, the directionally aspect we need to understand. And audit is not only about knowing the transaction level, but understanding the economic backdrop and trying to understand what are the parameters which are happening all around us, what is going to be impacting the banking industry. So if you look at even our general people around us expect us to know about everything and have a view on everything. And that's why I think it's important for us to also have a brief understanding about the economy and what are the changes which are happening around. So I think there are a couple of points which are very important and interesting to see how the banking industry is going to evolve. First has been, of course, that the Trump effect. Global uncertainties are there. Tariffs are likely to be enhanced. which will have an impact on the manufacturing industry, which will have an impact on the imports and the exports, and which will have a cascading effect. What is going to be the impact? Nobody knows at this point of time. There is an element of uncertainty. But I believe that this is one factor which we need to be keeping our eyes open on and to understand better in terms of what is going to happen on the economy, because whatever happens at the economic level will also have a bearing on the banking industry. And as chartered accountants, as auditors, we should be aware of what is happening in the industry. I think the second big thing that has happened is, if you look at the union budget, there has been a tax rationalization. This tax rationalization is expected to leave about 1 lakh crores in the hands of the middle class community. So now we are moving towards a consumption-based economy as compared to an investment-based economy. The government is trying to push for that. So at this point of time, it's all speculation, how things will unfold, whether a person would actually deploy this money back into consumption, or whether he would use it for actually repayment of his loans, or whether that will find its place in the equity market and the mutual funds. We don't know. But again, that will, 1 lakh crore is going to be a significant component which will change the contours of the consumption also, and again the fortunes of the companies also. And I think another thing that we should keep track of is what are the changes in the RBI position as far as the economy is concerned. So if you would see in the month of February, there was, after 5-year period gap, repo rates were reduced, which means that from 6.5 to 6.25%. So this has happened after 5 years where the rates have come down, which will again lead to a position where there should be more liquidity. The bank should be in a position to pass on better rates to the consumers, which should again give a fillip to the consumption. Now, all these activities that are happening in the economy is going to have an impact on the banking system as well. And the banks are nothing but a reflection or a barometer of the economic activity. Whatever is happening in the economic activity will get reflected in the banking industry as well. And that's where I think we should all understand of what is happening in the banking system, how things are going to unfold. What we should be looking at is not only the March 25 quarter for the results only for the March 25, but I think once we are doing an audit, conducting an audit for any industry, we should know more and more about that industry, and we should study and prepare ourselves appropriately. So even in the next year, we are in a better position to understand what are the changes and the impacts which are happening. So if you look at the economic landscape is one bit of it. The other bit of it is that how is Indian banking industry evolved. So if you look back over a longer span of time, maybe about 8-10 years, you would find that in 2016 or around, Raghuram Rajan, the then governor of Reserve Bank of India, had come up with this AQR, where the gross NPAs in the banking system were almost close to 12-13%. And a massive cleaning up exercise was carried out. It was for the first time ever in the history of the banking system, the banks took a hit, large accounts were taken under IBC, and a massive cleaning happened, which actually led to many of the public sector banks showing losses. The government went ahead, cleaned this financial statement, the banks cleaned their financial statements. There was recapitalization done for the banks, restructuring done, and there were also mergers which happened. So today, one of the impact, so if you'll remember, there have been quite a few mergers. Vijaya Bank was merged, Dena Bank was merged, OBC was merged, a large number of banks have been merged. So all that has happened is that now the government has tried that there will be fewer banks, but these will be stronger banks. These banks can compete at a global level. So you will see that the kind of mergers which had happened. So for example, Indian Bank had a south-based business. Allahabad Bank had a north-based business, north and east-based business. So a combination of the two was done. By merging these kind of things, what has happened is there has been a rationalization in terms of a number of branches. Bigger branches have come in, costs have come down, branches have been rationalized, effectively making the banks far more stronger. And I think that's the direction in which the banks have moved. Even on, though we are not connected directly, most of us, but maybe many of us in tier 2 cities are also involved with the regional rural banks. So even the same mechanism has been done as far as RRBs are concerned. There were about 100 odd regional RRBs, regional rural banks earlier, which have now come down to something around 43. and the government now wants to take it to 28, which means that for one state there will be only one RRB. So rather than having too many entities which are smaller and only locally focused, now there will be the process is on that you will have more banking institutions which are actually stronger and will be able to withhold any kind of stress that happens in the mechanism. So if I look at the NPAs from about 12%, 13%, anybody any guess what is the current NPA today, gross NPA in the banking system? Where would it have come from 12% to? So it is about 2.5% today, right? So it is far lower, far better. So now when we do an audit also, probably we are in a better position as compared to where we were earlier in terms of having the quality of the accounts that we are auditing. The NPAs have come down in a radical manner. The other aspect that as when we look at a manufacturing company, we look at in terms of what are the activities in that particular client and that particular industry to understand that client better. Similarly, in banking, if you see in the last few years, there have been a massive change. One aspect which we have seen under Modi government has been in terms of the financial inclusions. So you had a far more number of accounts which have got opened up, which has led to banking being available at the last mile. And the second immediate link which they have done is in terms of use of technology, digital banking, or the impact of UPI. Now, I think all of us have experienced this, the impact of UPI. All those who are senior would remember that you were not in a position to actually talk of checks or official payments or banking payments with your maids and the drivers and the support staff. But today, the last man with whom you deal with is comfortable taking money on a digital manner, and not only comfortable, they prefer to take it. They prefer to take it digitally. When we look at our younger generation, today students who are in colleges, those who are going on campuses, they don't carry any cash. They only have UPI ID, and that's how things have translated. And all that has led to an impact on the banking system also, because volumes have gone up. Volumes have gone up, so financial inclusion and digital banking, both as a combination, have now made the banking system do with a far more voluminous work. And when there is far more voluminous work, obviously there can be some impact on the methodology and the scope of the work or of the auditors also, of how do we deal with these aspects. But along with, when you have digital transactions happening, the next risk is, the impact is of cyber frauds. And that is, again, as auditors, we are concerned about frauds overall, but in terms of frauds also, more particularly nowadays, you find that cyber frauds are happening in a big way. And again, as auditors, I think this will be one area which we should always be cognizant of. Now, in this entire backdrop of the way we are discussing is the economy, and then zeroing down onto how does it impact our banking industry and what has been the impact or the changes which have happened in the banking industry in the recent past, I think we should also map this with the expectations of the stakeholders. Because today, as chartered accountants, we are bound to the expectations. We need to perform, and not only perform, we need to overperform or outperform more than the expectations of what the people around us. So what the people who are concerned with us is, obviously, first is the Reserve Bank of India. It's the regulator. It has been very proactive. If you look at Reserve Bank of India, it is one of those institutions which is highly respected not only in India but across the globe in terms of the way Reserve Bank of India has navigated the journey of the Indian banks, even through turbulent times. And Reserve Bank of India has been coming up with circulars and on a timely manner. And I think we as professionals are again expected to meet the expectations of Reserve Bank of India, which expects a good quality work out of us. Second is obviously our mother institute, Institute of Chartered Accountants, where the president and the council has been reiterating time and again that we need to do qualitative job. And with the kind of expectations which we see in terms of the audit we are all aware of NFRA being there, though it may not be applicable to the branch auditors, but I think the kind of learnings that are coming needs to be embedded in our functioning as branch auditors also, in terms of the care and the documentation that we do. The third is, of course, we also understand in terms of the expectations that the deposit holders have. We have seen that recently in terms of New India Bank, Cooperative Bank, but the impact it has on the depositors. Anything which is fraudulent happening and which actually impacts the stability of a bank can be hugely disturbing to the social system, the depositors. And I think we have an obligation to be good in our work, because the expectations of depositors, hard-earned money is there. We had also seen in terms of expectations, if you see one of the recent cases of our private banks which came up, there were an impact on the net worth of about 2.5% of approximately 1,500 crores. Now it has actually created a hue and cry in terms of what the profession has been doing, or how did it get missed out by so many auditors. Obviously things will come to know over a period of time, but I think what is important is that we are being sensitized at every point of time that we need to be very, very good in our work, and we can't just be looking at that this is an opportunity where we get some kind of a work, and once we are on the panel, once we have got a branch audit, we need to turn around, we need to finish off this work. But I think along with this, we have to be sure that we are delivering we are delivering to the expectations of the people. You have a whole day where you will be taken through various sessions in terms of being preparing and the various important aspects, be it in terms of loans and the IRAC norms and everything. But I think the expectations from the bank branch auditors is rightly from both sides. It's not only from the central statutory auditor's perspective, but also from the bank's perspective, that how do you meet the expectations, and that is what we should strive for. And some basic work, because this is element which is not, this work, as I was saying earlier, is not a work which you do 12 months in a year. This work is actually, you are doing it at a point of time, and then maybe, as many of us work with the articles, maybe next year the same team may not be available. And hence the process that we do for in terms of keeping ourselves upskilled and our team upskilled, I think it is important. So just a few points that one should always keep in mind is that when you are doing your preparation, go through some of the basic steps which are required to be done. So there is an old adage which says that failing to plan is planning to fail. So I think we should keep that at the back of our mind, that if we fail to plan, we are planning to fail, and we want to be successful. We don't want to be found short in our outcomes or the reports deliverables that we give. So I think a few points that one should bear in mind is in terms of work closely on the closing circulars which are issued by the bank, which is quite self-explanatory and gives you a good insight. Look at the RBI circulars which have been issued in the last 12 months. Look at the guidance note, because ICAI proactively comes up with the guidance note every year. Look at that guidance note, because almost everything is available in the guidance note of 2025. So that will enable you to do the right benchmarking. I also suggest that when you have this bank branch meet by those who get the work, when you have your banks, would be also having, normally they conduct a meeting with the branch auditors to explain to them, where the central statutory auditors are also there. So build up your connect with the central statutory auditors so you know who are them. Also the contact point in the bank, the zonal offices, etc. So you know that whom to deal with when you have some kind of a issue in terms of delivering, or you have some kind of a query or a clarification that you desire to know. So attend this bank meetings, stay connected with the central statutory auditors. And I think one important thing which most of the people miss out on is in terms of having the right understanding of the IT systems at the bank, because you would be having CBS systems there, and you would need to also know that how to get or generate these reports. So there are some proactive steps that you will have to take. WRC material will also be helpful in these kind of learnings, and maybe obviously you can interact with the SCAs or the banks, the branches, who will be able to help you in this bit of it. But spend a little time, invest a little time at the partner level itself, and not only at the articles level, in terms of understanding how you are going to get the output from the systems. because only if we have got a good control on the IT systems, we'll be able to generate the right reports. The other aspect is also that you generate reports, take the dumps, so in a manner that you are able to use some kind of analytical skill sets. You can use MS Excel, of course everybody uses, but if required Power BI, or depending on the size of the branch or the kind of complexities or idea software. But at least use the analytical aspect. You can define for yourself what suits you best, but focus on that so you're able to have the right thing. And I think every auditor should also focus in terms of understanding the branches you have, because every year you would have different type of branches, and when you have, so your branch is focused on advances or deposits or some other element, have a good understanding of the branch, look at those reports, etc. So I think these are some expectations which are expected out of you in terms of being able to do your work in a judicious manner. I think the areas of deliverable, I think most of the time we'll be spending a lot of time in the audit of advances, because audit is a significant, advance is a significant component of the bank business, and the branches are also selected basis the advances. So even presently the number of branches are selected on the basis of the advances. From my perspective, I think I would just want to stress on a couple of points from the bank's perspective. These are some of the points that we were discussing, is in terms of as professionals, as what is expected by the SCAs, or what is expected in the normal course by the institute and the regulator. But I think from the bank's perspective also, if you look at it, banks are also open to suggestions and ideas and thoughts from the auditors. It is not that the top management does not want the or does not value or looks at it only as a compliance. They look at it as a value-added services. And if you are able to collect the right queries at the branch level, it is well appreciated at the head office in terms of, yes, that these are the corrections which needs to be taken. And that's why every report that you generate or every issue that you flag off, be in terms of the controls or be in terms of client-specific issues, be focused in terms of putting across, identifying the issues and representing it at the right level. May not be everything in the audit report, but it could be in the LFR. Everything need not be a part of a qualification or something, but it would need to be related. So for example, I would say that today, dealing with an account after a fraud is identified is relatively, the structure is clear that what needs to be done. The banks would file an appeal, there would be an NPA declaration, the entire process will be there, investigations would happen, third-party investigations would happen. But I think as professionals, when I'm on both sides, when I am as a chartered accountant and when I am sitting on the bank side also, I think there are certain areas where we can add value, where we have not been adding as much value as we can add in. And one typical area which I would say is that in terms of identifying issues at the time of stress before an accounts become an NPA. So it's not SMA 1 and 2 that I'm discussing about. When there is a stress, even it is at SMA 0 level also, I think that's the time where we should be able to identify and flag off issues which could be concerning, which will help in preventing frauds or which will help in preventing the erosion of the value of the security. So banks have a committees, like for example, there is a willful defaulter committee. There are committees which are actually to deal with the serious, the large significant frauds which have happened. And there is a root cause analysis done. People are identified that what has happened. And at that point of time, we don't see too many statutory auditors having identified the stress at the earlier level. So to my mind, if we can add at least two things, if not too many at this point of time, I think what we should, I think many of you are aware that there is a concept of quick mortality, that any account which goes bad within the first 2 years of the account being given itself is actually put under the classification of quick mortality, and it is examined more specifically. I would suggest that we should look at all these accounts which are potential quick mortality. So one, I think in the year in which you are doing an audit, any long-term loans which have been given, term loans which have been given, please identify, please look at whether the end use has been appropriately done. You have the end use, where has the money gone? Is the documentation sufficient for you to understand and appreciate that the assets have been created? Because many of the frauds which happen is ab initio a problem where the funds which have been disbursed have not gone for the purpose. The assets have not been created itself. And still these issues have not been identified at the time in the years when it was sanctioned or immediately thereafter. And when these accounts get identified at a later point of time, and it is examined, that you find that there are lapses that in all audits it has not been identified that these issues could have been flagged off. So this is one element where I feel that where their assets term loan would have been given, please examine this aspect and try and see that if you can add value to the client. The second element which you see is in terms of the working capital. Invariably you are aware that under banking system, the current assets actually evaporate very quickly. The sundry debtors and the inventory you don't find by the time the bank is in a position to actually go for these assets. IBC has definitely put across certain impetus in terms of the clients being more proactive and trying to safeguard themselves or safeguard the assets. But I think again the other aspect is that when the bank proposals are being renewed, etc., at least have a look at the credit summations. For example, if the turnover was say 20 crores in the financial statement, okay, what is the turnover which is getting reflected in the accounts? Is it close to that? I mean, if you find that there are not significant transactions happening, the turnover was 20 crores and my turnover in my statement appears to be 5 crores, then there is an element of concern which we have. These may not be necessarily in NPA. These are standard accounts, but you need to address this because you can know that there is going to be a concern in this, because if his limits were sanctioned on the basis of certain element, his turnover is not there, it is being renewed again at the same level, then there are areas of concern. So I think these are the areas where we should be able to proactively add value to the client, and if we are able to do that, I think we'll have a lot more appreciation from the client's perspective. The last point that I want to say is that when we discuss with many of the professionals here, we invariably look at it, that we are given a very short period of time, that we have given only 10, 12, 8 working days within which we need to close or complete our audit, and that is the reason because of which we are unable to complete the audit. I have a different perspective on it, that for everything we should look at from both sides. So now you know that all banks are listed. They need to deliver the results within 60 days. Most of the banks are also wanting to close it within 30 to 45 day window. Now, there are 3 levels of consolidation which is happening, the audit which is happening. So you have branches, then you would have the zonal offices, and then you will have the central office. So only when you close the branches, you will be able to close the zone, and then thereafter you will be able to close to head. They also need time, right? So what it means that this is a ground reality for us. We can't wish it away. I can't say that, I will not take up the audit. Even if you were to do an audit of a private sector who is a listed company, you will have to give results within 60 days. Considering that, what we need to do is now that we know that this is the timeline available, we need to plan our resources and we need to plan our work in a timely manner, by virtue of which you don't have this handicap. And typically that is the reason why banks also try and allot the audits. Of course, this time I think by the time the allotment etc. would happen, it will be pretty late in the sense of 27th of March. I don't see how all banks will be able to complete before that. But the moment you get the information that this is a branch, immediately take up with the branch, understand their earlier reports, understand the business part of it, and do your due diligence, start your process. Don't wait for 31st March or thereafter. So because if we have to do this audit, if we are in this business, we have to deliver it to the client's expectations. We can't keep on cribbing about it that I have not been given the time and that is why I will make it, I will keep on delaying kind of a thing. It doesn't work. So friends, these are just some of the thoughts that I thought I would like to share with, to get you all started on this day. I want to wish all of you best of luck in terms of carrying out this assignment with full due diligence, and not only having a professional satisfaction, but also having a satisfaction that you are able to add value to the banking system. I think that would be the key factor that is important for us. Thank you very much for a patient learning.
Thank you, Sanjeevji, for briefing members about the recent developments in banking as well as economy. Now I'll request CA Ravi Soni to offer a vote of thanks to the keynote speaker, as well as introduction to the next speaker, CA Vinit Jain, who will be taking up the most important part of conducting bank audit, how to do the verification of advances. Ravi, please.
Thanks, sir. I, on behalf of WRC, Borivali Central CP Study Circle, would like to thank CA Sanjeev Maheshwariji for accepting our invitation. Everyone would agree that like Rohit Sharma, who always give good start and set the momentum, Sanjeev sir have set the momentum for the today's seminar. I once again thank Sanjeev sir and request everyone to give him big round of applause. Now, before uh, introducing the first speaker, a small announcement for all those BCC members who have paid more for this seminar. Please coordinate with Sanjay at the ground floor during the lunchtime, and he will refund. He will make the arrangement for the refund. It is my pleasure to introduce today's first speaker, CA Vinit Jain. CA Vinit Jain has over 12 years of experience in financial statement audit, accounting advisory services, and regulatory reporting, particularly within the financial sector. His expertise span the assurance function, account and CFO support services, and regulatory reporting. Vinit demonstrate a profound understanding of audit interference, especially within the banking and financial sector. Throughout his career, Vinith has extensively involved in conducting statutory audit and advisory services to diverse range of financial institutions, including private sector bank, public sector bank, foreign bank, payment bank, non-banking financial companies, manufacturing companies, service sector, and alternative investment fund. With this brief introduction, now I request CA Sarash Sir to please give him a memento on behalf of WRC and Borivali Study Circle. Now I request CA Vinit Jain to please take the charge of the session.
Yes, absolutely, sir. I will also be standing there. Good morning, everyone. Am I audible? Screen visible? Hmm? Thank you. Okay, to start with, thanks to WRC and Borivali CP Circle for inviting and giving me an opportunity to make a presentation on very important topic, that is verification of advances. And thanks Ravi for introduction. So to start with, I think first I want to understand the nature of audience. whether they have already carried out the audit earlier for the bank branch. It's really good to see people coming out in such a large number on Saturday. And we all know that bank branch audit, when it comes, it's only once in a year where we all come together, get some insight, what are the changes, what are the material guidelines been issued by RBI. So from that perspective, to structure how we should discuss this presentation, just want to understand who are the one who will be doing the audit for the first time. Okay. So most of them are already doing the bank branch audits, either as a statutory auditor or as a branch auditors. Is this understanding right? Great. So that will be helpful to structure the overall presentation and our discussion. Let's keep this a two-way communication rather than I giving on Gyan, which is limited basis my experience. I think we all are sitting here, everyone will have some or other things to say on each and every single point what we are going to discuss today. To start with, the structure will be setting the context, and since this has been the first topic for the day, I thought let's change the structure. Let's not discuss more on theory. Advances क्या होता है, कितने types होते हैं, कैसे हम audit कर सकते हैं, वो I think हम यहाँ पे सब बैठे सबको पता है कि हम कब कैसे क्या audit कर सकते हैं. Let's put our time, use it more effectively, and let's discuss more on practical observations, challenges, what I have faced during the course of my audit, what I have learned through the internal audit of the bank or through the joint auditors or through other colleagues. So we'll be spending more time on first two things, which is key updates and insights from the audit review. Last 2 points, audit approach, reporting LFAR. I think we all are chartered accountant. We all know how to do the audit, how to do risk assessment. We all understand all those stuffs. So I won't be going through all those things. The presentation is available. You can go through. But let's try that next 1 hour, spend time more on understanding what are the key updates, understand what are the recurring kind of observation which keeps on coming, and please feel free to share your opinion, to share your views, to share the observation which you came across during the course of your past experience. To start with, again, Maheshwari ji gave some of the context with respect to this particular slide. This is more on the asset quality, and this is coming from the Reserve Bank of India Financial Stability Report. We'll discuss on the statistics. So, as Maheshwari ji also mentioned, the gross NPA ratio has come down to a percentage of 2.5%, which is 2.6% in September 2024, which was the lowest in last 12 years, which is a great sign of asset quality. And that too, if we see the quality of the asset in the large borrowers, that is the corporate, has increased or has improved significantly. The NPA ratio remains stable at 0.6. There are slippage, which in this particular year has increased marginally, 0.7. Again, this increase is not on account of addition from the large corporates, but mainly on account of the concern which was been raised by RBI and the governor on credit card portfolio, unsecured personal loans, and MFI portfolio. So the concern which was raised 2 years or 1.5 years back by RBI governor, which is actually turning into a reality, and we can see the increase in delinquencies, increase in slippages in those particular areas. As I mentioned, large borrowers gross NPA are declining faster. The large borrower in March 2023 was 4.5%, which is now 2.4% in September 2024. And this is not only on account of write-off. There are huge recoveries, and the new additions are really, really very few. However, if we see the increase in the percentage of SMA1 and SMA2, SMA1 is the delinquency. Before it goes into a NPA, there are SMA0, SMA1, SMA2. So from 60 to 90 days delinquency, from 30 to in fact 90 days delinquency, we can see the increase in the percentage, a slight increase, but still it requires now a close monitoring. You may not find large corporate borrowers coming in, but definitely SMEs, small corporates, which are contributing to this increase. And this increase, as per RBI, is happening on the public sector bank side. The contribution of the top 100 borrower is declined to 34.6% in September 2024. This is the stress test with again coming from the RBI source. The gross NPA ratio, what is expectation, what can be in March 2026? If the conditions remain same, it can increase from 2.6 to 3%. However, when they do the stress testing, it has been shown that in adverse scenario 1, it will reach to 5%. Adverse scenario 2, it will reach to 5.3%. And we can see the impact on the banks. The impact are mainly because of PSBs, where the expectation is that in adverse scenario 2, from 3.3%, which is existing, it can go to 7.3%, as compared to private sector banks, which is 1.9 to 2.9, and foreign sector banks, 0.9 to 1.4. So these are the statistics which are coming through the RBI financial stability report. Okay. बहुत ज़्यादा ज्ञान बांट लिया. Now let's have some interaction, just to break the wall and just to start now this presentation. I know my next question is very simple, सबको पता है, but still I want to hear what is banking? What are the functionality or what are the functions the bank do? Perfect, sir. Very good. But what is the source of that funds? Perfect. Who governs the bank? What are the regulations which are applicable to the banks? Sorry? RBI and banking regulation. Perfect. Who is the regulator? RBI. Perfect. So we all know bank accept deposits, give loan, but this is one set of thing what we know. There is another set which is treasury management. So as a branch auditor, we don't come across to all those stuffs, but treasury management is also one of the very important factor for managing the funds. On anything on the operations, considering your experience on how it is centralized, how it is decentralized when it comes to bank branch audit. Any experience you would be doing various banks. So that is mandatory. Perfect. Perfect, sir. Anyone else want to try? Level of operations. And this is not right or wrong question. This is basically an experience. कोई बैंक कुछ और कर रहा होगा, decentralized होगा, कहीं पे centralized होगा. So operation can be centralized, decentralized. And why this is important? Because when you are a branch statutory auditor, you will come across an answer that ये तो सब centrally हो रहा है. At a branch, we are not aware कि इसका take a simple example, interest computation. Branch will say we are not aware because these logics are being set centrally and we are relying on that particular logic. System से ये report आ रही है और ये. So as an auditor, what is your responsibility? Well, you will accept that, you will mention the fact in the report, or you will go one step ahead and test the logic been set in the system. Expectation is to test the logic, because you are signing the financials of a particular branch and you cannot rely on the management representation that these are the system logic which are been set and everything is working properly, which is been checked at the centralized level. Yeah, and use of technology, I think because of increase of the transactions, again Maheshwari rightly said that increase in the number of credit card transactions, UPI transactions, the way the bank has transformed from manual handling to a technology based banking system. Understanding the bank, understanding its IT system is the utmost important thing. If you have got the appointment letter, please close down on appointment formalities and start, the first point of contact should be the person who understands the IT in the bank. And you will not be doing an IT audit for sure, but at least having an understanding will help you in doing the proper planning. And this, sure. So that will be, sir, SMS can be a good source of your sampling. The accounts which are continuously coming into an SMS, you can pick those as a sample and verify what are the reasons why it is not turning into an NPA if it is continuously coming in and out of SMS. If those are SMS, whether the proper reporting has been done. And for NPAs, I think there is a set process. If the account is an NPA, then you need to see what all further procedure has been carried out by the bank as per the policy, whether those are been properly provided, whether if required, the IBC proceedings have been started or not, whether it is under consortium or it is under a sole banking, whether the policy has been followed, what is required to be followed by the bank. So, and concentrating on the NPAs, concentrating on the SMAs, it can help you in identifying some of your samples to verify that all the processes which are required for a stress account is been done properly by the bank. This is a bank structure. I won't spend much time. This has already been discussed. This is discussed. Yeah, key steps in bank branch audit. Appointment. Ensure you have the appointment letter in hand. You have taken the NOC from the previous auditor. You have entered into an engagement letter and started your discussion with the branch manager. Basis that you can start your audit planning, execution of the audit. Audit documentation, very important. If not, no documentation means no audit done. We all know NFRA coming up with various circulars. Now RBI have also started interacting with the branch auditors. I'm not sure if anyone of you have got an opportunity to discuss with the RBI for the branch you have audited. Because now auditor is not only restricting themselves to the central auditors, but also discussing the points with the branch auditors if they are not satisfied with some of the conclusion being made by you in your report. Prepare the MOC and submission of the reports. I think this all will be, I hope will be getting covered when you have a planning related session today. So this is just to set the context. These are the key deliverables: signed balance sheet or your report, LFAR, tax audit. Somewhere it is now centralized, somewhere it is again still decentralized. Returns and certificates. Yeah, these are the key expectation. Again, some of those are already been covered. Ensuring the compliance with the closing instructions, framing audit plan, and strictly adhering to the timelines. Knowledge of the core banking system, circular directions of HO. You should be thorough with the circulars been issued by HO, by RBI. What are the new updates? Verification and classification of IRAC norms, correct reporting of MOC, and report certificate LFAR. Just one point here to highlight: audit report and LFAR are two separate things. They do not substitute each other. If there is a requirement to qualify the report, just by putting in the LFAR will not serve the purpose. You need to qualify the report. There may be a possibility there is a duplication. You are qualifying as well as you are giving in LFAR as well, which is absolutely fine. However, something where you just to accommodate your client, not mentioning in the main audit report will not serve the purpose. Okay, key updates. So since this is a bank branch audit, I presume that you will be doing audit of a bank only once in a year. Every year you get a chance to do either the same branch or the different branch in the same bank or a different bank. Anyone who is doing any other maybe foreign bank or a private sector bank audit as well? So which is a continuous process. Every quarter, every half year, you keep on interacting with the bench team. However, now considering this we only get a chance to interact with the team once in a year, that too at the flag end when we get the appointment. So the question is, or to understand how we keep ourselves updated. There are number of RBI circulars which keeps on coming in. There are certain circulars which are very important when you do an audit. So just to understand how we keep ourselves updated in that particular process, and any one or two important updates which you are aware, which you have started your preparation for doing the bank branch audit. Anyone? I think this is the major challenge which come across when we do audit of a particular entity once in a year. We are very much into our taxation practice, our GST practice, our normal private sector audits. However, this being a regulated entity, it becomes more onerous as compared to anything else. So keeping ourselves updated is I would say a serious business, and it's not like attending the seminars or just reading in last few days will help you. If you are a continuous auditor of a branch, I think you need to bring that approach. You need to keep yourself updated throughout the year. Execution will be once in a year. However, that will help you to keep yourself updated. What are the new things coming in, and will help you to carry out your audit procedures smoothly. Yeah. So first key update is on fair lending practices, penal charges in loan account. So this came last year in August 2023, and then there was an extension which was been given and made applicable from 1st of April 2024 for the accounts where the fresh disbursement will be done, and for the accounts which are in existence, the outer timeline was June 2024. That means any account which was in existence and coming in renewal between 1st April to 30th June, that renewal date you need to ensure that the penal interest is been converted into penal charges. And for any other account where the renewal is not coming, 30th June was the outer timeline. Now what is this change? So anyone, what kind of interest component was there when you were auditing, or based on experience reading the sanction letter? There is a normal interest rate, there is a penal interest rate. Anyone, what is the difference? How the accounting was been done? Not in this particular scenario, in the scenario where you have audited last time. Sorry? Okay, penal interest. Over and above the normal interest. How it was been accounted, sir? Whether it is been accounted on realization basis or it is been accrued along with our normal interest? So it's a mixed practice. So some of the bank used to record on realization, some used to accrue as well. What is the implication in asset classification? Whether those penal interest was been considered as default, and the DPD, the default days used to start for computing the 90 days criteria to classify the account as an NPA? Old scenario, sir. Penal interest में क्या होता था? क्या उसको consider करते थे NPA के लिए? No. Okay. Again depends. अगर accrue होता था तो करते थे, नहीं होता था तो नहीं करते थे वो realization पे. Compounding. Interest पे interest लगता था. Normal interest पे अगर pay नहीं किया तो interest लगेगा. Penal interest अगर pay नहीं किया तो उस पे interest लगेगा. Okay. Again a mixed practice. जो accrue कर रहा है वो कर रहा है. So looking at this diversified practice across the banking industry and setting the context that what is penal interest and what is penal charge. RBI says that your penal interest, you charging something additional, should not be a source of income. This is basically nothing but to bring the discipline of credit within the borrower. You can charge something, but that has to be a transparent process. You cannot say I will charge 2% per month as a penal interest, and if you don't pay that, I will charge interest on interest. That means you are making that as a source of revenue, but that is not a source of revenue. You need to charge this to bring the discipline. And hence they came up with the concept of penal charges, where they are saying now you cannot charge penal interest, but you need to charge penal charges. And these penal charges cannot be compounded. That means you cannot have interest on these penal charges. And this should be a transparent, which should be communicated to the borrower in their document, in their sanction letter, in their key fact statement. So now the compounding is not allowed, and now the you cannot charge interest on those, and it has to be a transparent process. So now what will be, how banks have done this? Again, there is a multiple practice. Someone has divided this 24% per annum into charging one time 1.5 or 2% on every single default of EMI. Take an example, if one EMI is not been paid, you will be charged the normal interest, and you will be charged one-time penal charges, which is 2% or 1.5%, and that's it. You need to pay only one time that particular. Next time when again you default for the second EMI, you will be charged penal charges on that second EMI, not also on the first EMI if you have not paid the first as well. So this is the way some of the banks are doing. Some of the banks have divided this 24% into two parts. One will be charging normal interest, which is, to take an example, 12%. Balance 24%, which is there as a penal interest which I was charging. I will convert that into 12% as a normal interest, which means I will start accruing 12% as a normal interest, as an additional interest on the default amount, and balance 12% I will charge as one-time penal charge. So that again is a varied practice which has been done by the bank. You need to understand what your bank is doing, because that will have an implication again on your accounting, again on the compounding which has been done, and again on the asset classification. So in first case, where they are charging only one time as a flat charge, no accounting will be done, because that will be recorded on realization basis. No consideration for NPA computation, and you are not allowed to do compounding anyways. In second scenario, the portion, 24% portion, which is split into two parts, 12% the normal interest, that will be accrued, because now it is a normal interest. So if I'm not paying, or I'm paying after delay of 20 days, I will take additional 12% interest on the 20 days. However, the balance 12% which is charges will not be considered neither for NPA calculation nor for compounding, and in the interest portion it will be also be considered for NPA computation. So get this understanding. Your first answer will be this is centralized process which has been done, but definitely since you are signing the P&L, you are signing the interest portion of it, you need to ensure that how these changes have been done in the system, and on test basis check one or two accounts whether that logic is correct or not. Any question on this particular thing on penal charges? Please. There cannot be penal interest. It will be in nature of penal charges. And recently there is a GST clarification as well, that there won't be any GST on this particular penal charges, because it is just a substitute of interest. It is not any additional service which has been given. Bank to bank. Bank to bank, you need to see the sanction letter, you need to shoot the communication, how it has been done to the borrower as well. But then there is a renewal process. So so for the existing case, outer timeline was 30th of June. So any renewal which is not happen on 30th June, there would be some communication which would be, and you can also see the policy which is available on the internet, on the website of the bank. It will be available. Sorry? Any kind of account, sir. And more for term loans. There are review which happen for the term loans. Yes. So short-term facilities like working capital, there is an annual renewal which is required. For term loan, there is an interest reset dates. There is a review which happens every year. So interest reset dates. So more than review renewal, the important thing is how it has been communicated, and same will be available on the website of the bank. Next key update is on the key fact statement. In last year, from 1st of October 2024, there is a mandatory document which should form part of your sanction letter, which is a key fact statement, which requires that there are certain important parameters or communication which should form part of this particular key fact statement. These key fact statement should be given well in advance to the borrower before signing the final sanction letter. They should be given a time to understand what actually I am going to pay, what is the loan amount I'm going to get, what are the various other charges which will be charged, like processing fee, documentation charges, valuation charges, any other charges which has been charged by the bank should be clearly documented, spell out in this particular statement. There is a concept called APR, annual percentage rate, which is nothing but, in simple term, a cost of credit to a borrower. Simple example, I am paying 10% interest, but along with that I am paying certain charges like processing fee, valuation charges. If I add that to my interest will not be 10%, it will be more than 10%. So that APR computation should be made available, and the language of this KFS should be the language which is been understood by the borrower. You cannot have a scenario आप English में दे रहे और sign करवा रहे हो, I have understood everything. What challenges we have faced or what we have seen while discussing with the team on this particular matter, we have seen certain cases where the interest rate is 10%. However, the APR is less than 10% even after they have charged certain other charges. That means the valuation of APR itself was incorrect. When we asked for the logic, what is the logic been set to arrive at this APR? Again, the answer was this is system based. If the person who is preparing this is not aware, the communication is being done daily by an RM, regional manager, with the borrowers, whether they are aware about this fact, because the requirement is you are required to make them aware about all these things before giving a sanctioning, and to take a sign off that the borrower is now aware of about all these things. Trust me, this is happening in most of the cases as a part of documentation, a tick box. The person who doesn't understand, who is not even able to speak properly in Hindi, is signing a document in English stating that I have understood all the things. So all these things should be done in spirit rather than only for the purpose of compliance with the RBI regulation. And RBI has also raised this question with the banks, with the compliance team, that the intention is not to have one more paper to the sanction letter. The intention is that there should be a transparency which currently is missing because of the practice which has been followed, and it should be followed in true letter and spirit. Again, charging of interest. This is again an interesting regulation or instruction been given by an RBI. According to you, when an interest should be charged, or what the bank used to follow till now for charging an interest? So this presentation will be available. आप नहीं भी लिखोगे तो चलेगा. Anyone, based on your experience, how the interest has been charged? For the date of first disbursement, okay. And what is disbursement? Check, cutting the check, preparation of pay order. So date of issuance or date of handover? Date of issuance means you have cut the check, you have written the check. Date of handover is when you give to the customer or to the borrower. What in case the customer has not asked for the disbursement, but just to reach to your target, I'm cutting the check and keeping. Sorry? So we have seen cases where a blank disbursement letter has been signed by the borrowers. When you go for a loan, you don't read everything. You just sign the document and give it over the counter, sir. Good question. Anyone else? Basis experience, what is the practical? Not as an auditor, हमने भी loan लिया है, हम भी जाते हैं. From which date the bank start charging the interest? Single. Cutting the check.
They take the details to RTGS. So if you take that, then that is the practical thing that RTGS, date of RTGS.
So let me modify my question. In case where the digital mode is not been used to disburse, where you are giving check, pay order. तो उल्टा है. आपको पहले पे ऑर्डर बनता है. पे ऑर्डर आपकी लाइबिलिटी साइड खड़ी होती है, आपके बैंक से पैसा निकलता है, यू हैव अ लाइबिलिटी, देन यू रिवर्स द पे ऑर्डर एंड क्रिएट अ लोन. सो लोन तो क्रिएट हो जाएगा अगर मेरे पे ऑर्डर मेरी लाइबिलिटी में भी खड़ा है. लोन तो क्रिएट हो जाएगा, वो तो सिर्फ एक अकाउंटिंग एंट्री है. ओके, सो देयर अगेन RBI has observed that there are again different practices followed by different banks. Some of the banks were charging interest from the date of sanction letter, that is from the date of agreement, irrespective whether the amount has been disbursed or not. Some of the banks were following the practice where they used to cut the check, prepare the pay order, but not been hand over to the customer on the basis that there are certain documents which are not been made available to us and hence we cannot give. But again, then the question is whether you can recognize an asset without getting those documents. So answer was no. So looking from that perspective, and again from a customer fairness perspective, RBI came up with this circular where they are saying that interest charging date must be only from the date of actual disbursement. Now actual disbursement is not been defined. However, some of the banks are saying that whenever the funds will go out from my account, I will start charging interest. Some of the banks have taken a call that whenever the check is been handed over, we will document that this is the date on which the check was been given to a borrower. Then it's borrower responsibility to go and deposit in the bank. If they have not done, but since we have earmarked our funds, there is a cost for us, we will start charging interest. And this also somehow supports, because in that circular itself, there is an example which has been given by RBI which says that banks are charging interest before handing over the check to the. So drawing the analogy from that, some of the banks are saying that we will start recording the date of handover, and from that we will record the loan and start charging the interest. Proportional interest calculation. Some of the banks were charging full interest even if the disbursement has been done in between for some days. So that is again not allowed. You need to charge interest only for the days in a month for which you have given a loan. Advance installment adjustments to prevent charging. So RE must adjust the advance installment to prevent charging interest on the prepaid instruments. Refund of excess charges. Any excess interest on unfair must be refunded to the customer. So while doing this activity, if you come across that you have charged something extra, the bank are required to refund those interest, and you as an auditor are required to first understand whether those changes have been done in the system. If not, at least the provision has been made by the bank for those refund amounts. Again, what I understand, you will get an answer that this has been done as a centralized team at HO level. However, just take the comfort how this has been done and how it is impacting your branch. Gold loan. Again, this is based on various news now available in public. Some of the NBFCs not adhering to the regulations given by RBI. There are certain experience been shared by the RBI which says deficiency in sourcing and appraisal processes. That means the lenders are using the third-party services who are doing all the assessment, which as per RBI is not allowed. When you are lending, you need to do all the assessment, you need to do valuation, and accordingly disburse the loan. Non-compliance with cash, this is more from NBSC perspective, we'll skip. Use of internal office accounts. You are disbursing not directly to the borrower, but using an internal office account where in case of rollover, renewal, you park the funds in the internal office accounts without getting the actual fund and open a new account to just show that we have received the fund and we have given a new fresh disbursement. Rollover, again the same example. Lapses in loan monitoring, LTV. So in gold loans, if the value of the gold is 100, you can give maximum loan up to 75%, and that 75% should continue throughout the period of the loan, which includes the interest amount as well. The monitoring was not happening properly. Maybe this year, now considering the value of the loan, which has value of the gold, which has gone up significantly, you may not come across such situation where the LTV is breached. However, during the period, there were 1 or 2 times where the rate were down. Just ensure what is the process been followed and is there any impact on the LTV? If yes, what the bank has done if you are doing a branch where the gold loans are substantial. And this is what you can do as an auditor is evaluate the sourcing and appraisal practices. Check what is the process, what are the practices been followed by the bank. Check the CCTV footages to ensure how the valuation has been done, whether it was proper or not. We have come across that the bank generally keeps the CCTV footage of only 90 or 180 days. If that is the case, please mention that in the LFR that you are not able to check the CCTV footage for the samples you have selected in your LFR. You need to see what is the reason for rollover, which will come, I think I have that. If the rollover has been done for the default cases, right, where there is only partial interest payment been done, if all the payments are proper, or if they have a product which allows you to do the rollover on making the interest payment at least without any default, then it is fine. But cases where there are defaults, you are just closing the loan, parking into internal office accounts, opening a new account and again disbursing the loan. That means there are no repayments which are happening. If such cases, you need to ask the bank to download those accounts because those are not fair practices. Yes. Physically verify in the sense, yes, but you cannot open the pouches and ask someone to do the valuation. We are not allowed to do that as per, but at least you can do the touch and fill check. You can verify the number of pouches as per system, and in physical, you need to cross verify the numbers of pouches. You will have 15 pouches, but the serially numbered in the system is 15 to 30, but what you have is 45 to 60. So you need to cross verify the pouch number as well, because sometime it may happen someone open the pouches, split the gold into 2 pouches and show you that I have 15 pouches. So quality and fineness, I'm not sure whether you will be allowed to open and do the checking. Again, this activity was been done in most of the private sector banks. The RBI has asked the auditors to do such checks, open the pouches, take someone who understands how to do the valuation and get the again revalued and compare what was the valuation as per the original valuation and what is now coming. So that activity has been done in, you can ask whether this similar activity has been done in your bank, but you will not be able to open and do the verification. You can just confirm on the numbers and the touch and fill whether. No, no, not necessary. Touch and fill, sir. Touch and fill. Increase in the limit to waive the collateral security. So for the agricultural loan, the limit was 1.6 lakhs, where the collateral was not required, which is now been revised from 1st Jan 2025 to 2 lakhs. So this is just a update. Now moving on to the insight from the audit review. These are nothing but commonly observed observation. Yeah. I don't think so. It will be done at the branch. Co-lending generally happens at the centralized level, because the way the recording is required to be done for the lending which has been done, or the co-lending part, all those are being managed centrally. Branches, I don't think so, will be even allowed to do the co-lending. So certain practical experiences, certain practical challenges, observations. Now request, please share your opinion, views as well on few. There are 5-6 slides. Then we will end our session. Then everything is more of theory. You can go through the presentation. So first is on the credit personal loans. So anyone who remembers what RBI stated last year and what action they have taken on this particular piece on personal loans, on consumer credits. Okay. Okay. So this is more from to on the asset quality. How to improve the asset quality? What steps has been taken by the RBI? This was been taken last year. You would have audited last year as well. So RBI was concerned about the quality of assessment which was been done in case of consumer credit and personal loans. What does it mean? The assessment when a consumer loan was been given, no one was checking whether the person will be able to repay. Basically checking their obligations. They have any existing obligations. The borrowers were over leveraged. That means one person was having 3, 4, 5 loans. The loan assessment was been done by the fintech partners through digital modes using the business rule engine. So there are technical jargons which are being used. We use business rule engine. The system runs the parameters and give us the output whether you should give the loan or not. But that will also be done by a third party, not by the bank. All this led to accumulation or consolidation for quality, which is not, to be very frank, is good for the economy, where we cannot even trace the end use, whether the funds have been used for gaming, for the genuine purpose, or for investing in the stock market. We all know last 2 years stock market, everyone is putting 100 rupees and getting 200. Magic tha. But now we are seeing that concern which was been raised by RBI at a very right time and taken a very right action. So the delinquencies have increased, but agar wo steps nahi liye hote, तो banks would have been in a huge trouble. KYC checks were being done by the fintech, lending to a borrower without even looking at the CIBILs. CIBIL score nahi hai. No problem, sir. We are ready to give the loan. And ये ऐसे नहीं सिर्फ banks कर रहे थे. Banks used to give to NBFC. NBFC used to give loan to such kind of people. But at last, there will be a cascading effect on the banks as well. End use of the funds we discussed. For such small loans, 10,000, 15,000, 50,000, we cannot check the end use. So what RBI did, RBI has increased the risk weight. RBI has asked that you increase the risk weight by 25%, which means you need to keep more capital on such kind of loans. Not only on the consumer credit, but also the loan which has been given by the bank to the NBFC. There was an increase in risk weight. That means if you need to keep more capital, you will start curbing more disbursements. You will only give to a person where you believe I will get that funds back. That in turn helps you to improve the quality of the asset, and which actually did. This was the governor's statement last time when he was in his all the meetings in financial stability report. He continuously used to say, we are at a junction where there may not be an immediate cost of worry, but the banks and NBFCs need to be on the top and are advised to take the precautionary measures. Trust me, if we compare quarter on quarter, the numbers of last 2 years for credit card defaults, for MFI defaults, for consumer loan, personal loan, it has increased like anything. MFI was a super profit business post COVID for 2 years. Last 4 quarters, none of the bank is doing profit in that particular, or I may not use the word profit, but the credit cost has increased significantly. And when I say significantly, it is 13 to 14 or 15% credit cost. But they have done the super profit as well. But the reason was over leverage. One person was enjoying 4 to 5 loans within a family. And for MFI, there is a requirement that you can be considered as a MFI only when the household income is up to 3 lakh rupees. So imagine household income, that means सारे family members का मिला के income is less than 3 lakh rupees, having a loan of 15, 20, 50,000, 75,000, and that to multiple loans. How one can repay those loans? Home loans, yeah. Yes, you get a certificate. So in the arrangement itself, there will be a requirement that every quarterly you need to earmark the loans which has been used against the fund what we have disbursed. Yes, yes, yeah, absolutely. Yes, yes, yes. Because that is the main source of the business, and we have it's a secured line of business against the asset, against the lending which they would be doing. So you need to, like stock statement what you will get a the list of the borrowers of that particular NBFC, which should be, and there will be various criteria that you cannot have NPAs in those lists. So whenever there is an NPA, you need to replace with a fresh this thing. No, no, no. Because they are also regulated entity. They are also been regulated or reviewed by RBI. They also have their internal audit and statutory audit bit happening. So you can rely on that process. What is important is you just need to compare various documents and just see that whether the particular borrower which has been shown is also a borrower of a bank. What is the conduct of that particular borrower with us? And if it is an NPA with us, why not? What is the reason not an NPA with that? So that kind of analysis you can do, but not required to go and check what NBFCs are doing and how they are doing. Yeah. Certain observations on home loans and properties. So whenever there are co-borrowers or co-applicants, we have seen that the obligation of the income of the co-borrower or co-applicant is being used to arrive at eligibility. However, the obligation of the co-borrower was not being used. So this resulted into higher eligibility as compared to what one should have been. Charging of interest, again we discussed this, charging of interest from the date of agreement or a sanction letter rather than from the date of actual disbursements. There are certain kind of loans which are been given basis the criteria that once the OC is been received, the EMI will start for a particular borrower. However, we have seen that just a declaration been given by a builder that I am expecting the OC to come in few days, few months, the EMI used to start on the borrower. So check those particular points, the kind of loans which are been given and what are the conditions where you will be only having a pre-EMI kind of loans, charging interest, and where from when you will be start collecting the EMIs. While doing the interest computation or interest checking, what procedures you carry, how you take the comfort. Advances, we see lots of documents. We discuss lot with the management. We discuss lot with our colleagues to get the understanding about the industry. So advances side पे तो हम लोग बहुत अच्छा कर लेते हैं. How you take the comfort, how you document your P&L side, and specifically the interest income. What procedure you carry? We rely on the fact that there are central statutory auditors, there are internal auditors who are doing the audit, and the numbers are been coming through system. We are in an era जहाँ पे AI है, जहाँ पे इतना automation हो गया है कि we rely on the automation. Do we check those logics? Perfect. So income was not been consequentially transferred to the PNL. It was still been shown as a part of proportionate accrual basis. Okay.
Checking the interest income on advances, I think core banking system has a functionality of daily product statement. But in my 3 years experience, I have not been able to cull out that statement through my login in auditor through system view option. I have not been able to cull out that statement. And even
So
if
you are struck to get the answer from technology.
even if I ask the IT department that you provide us for selected sample accounts, daily product statements, I have not seen that. They
Okay.
have not provided us that daily product statement.
So as an auditor, I think we also need to do the audit by way of traditional approach. We should not only rely on technical. Okay, if you have an IT team, get the logic test done, but do build the scenarios. If I want to check an interest income, what are the various scenarios? A normal case. Recompute. Perfect. What kind of scenarios you build while doing this checking? One is normal, सब पे कर रहा है, सब कुछ बरोबर आया, पर वो life is unfair, सब कुछ straight नहीं होता. ये भी सब सिंपल है, स्ट्रेट फॉरवर्ड है. ये तो सब बिजनेस ही है सर, उनका रिस्क लेना. एनपीए भी होंगे, स्ट्रेट फॉरवर्ड भी होंगे. बट जैसे रेपो रेट चेंज हुआ, ये बार सबके इंटरेस्ट रेट चेंज होंगे. व्हाट विल बी द इम्पैक्ट? किसी ने एडवांस में पे कर दिया है, दैट इज इंटरेस्ट रिसेट डेट. जो पॉलिसी होगी, एग्रीमेंट होगा, उस दिन से होगा इम्पैक्ट. यस, टेस्ट. किसी ने अपना ईएमआई शेड्यूल चेंज करवाया, किसी ने प्री पेमेंट किया, किसी ने लेट पेमेंट किया. ये सारे सीनेरियोज जब चेक करोगे, यू विल कम अक्रॉस दैट जो हम लोग का एक मीथ है, सिस्टम इज डूइंग एवरीथिंग प्रॉपरली. दिस इज नॉट अ केस. वी हैव कम अक्रॉस वेयर देर आर सर्टन चेंजेस विच इज बिन डन, वेयर वी हैव चेंज द repayment schedule from 5th to 10th. So basically in that month the interest should be charged for 35 days. But the system has a functionality where they used to charge only for 30 days. So there were miss of interest for 5 days for multiple such accounts. On the status of the loans, on the so first whether your branch is actually sanctioning a loan to a under development projects. If yes, you need to ask for a status update where the bank takes the update on that particular project. What is the update? What is the status of that loan? Whether they have achieved the RERA related dates which has been confirmed. And one interesting thing and a practical experience again, cases where the RERA deadlines are been breached and there are some demands which are been raised, the banks are not supposed to disburse those loans. So whether that has been happening. So the bank is tracking whether this project has achieved. But okay, sorry, can you repeat your question? Okay. 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 So that's fine. So then you need to just take the status of the. सर मॉर्गेज तो अभी भी है, वो जो बिल्डिंग, वो जो लैंड पे जो बिल्डिंग बनेगा, जो रीडेवलप होगा, उसका जो प्रॉपर्टी जो है वो तो आज भी आपके पास ही है. The owner will not be able to sell without taking the न्यू डॉक्यूमेंट. इन व्हाट सेंस? वो जब न्यू डॉक्यूमेंट इन द सेंस जब नया रजिस्ट्रेशन और सब होगा, दैट टाइम दैट विल बी सबमिटेड, क्योंकि उसका भी एक अलग प्रोसेस है. बट एज अ बैंक दे आर सिक्योर्ड. द बोरोअर कैन नॉट सेल द विदाउट टेकिंग द एनओसी फ्रॉम द बैंक. सर नया एग्रीमेंट बनेगा, उसके लिए भी आपको बैंक के पास आए होंगे वो लोग टू टेक द एनओसी. बैंक से दे नीड टू टेक द एनओसी, क्योंकि इस पे चार्ज है. जो बिल्डर है, जो रीडेवलपमेंट भी कर रहा है, जो बिल्डर है, दैट विल ऑल्सो आस्क एवरी पर्सन दैट आपका अगर कुछ है तो यू नीड टू गिव अस द एनओसी फ्रॉम द बैंकर्स एज वेल. यस, डेवलपमेंट एग्रीमेंट में भी वो आएगा. सो बैंकर, द बिल्डर इटसेल्फ विल आस्क यू नीड टू गेट ऑल दिस एनओसी फ्रॉम योर बैंकर. Sure.
3 years, 4 years we got one bank. Everywhere they say that housing loan is being disbursed from the housing loan department, which is different from the branch. So we were by processing fees. Housing loan processing fees for some time of the year they charge, for some time of the year they don't charge. But when they charge, it is waived. Na? Sometimes it is waived.
No, but generally it would be recovered when you sanction. So it is not on disbursement. Processing fee will be one time at the start when you sanction.
Waiver.
Yes.
Is there for housing loan.
Perfect.
But when it is charged, that was not charged by the branch, saying that it is being charged by them. And even that housing loan department, they said it is the responsibility of the branch, even that was not charged. Because when we checked the processing fees account, branch was not getting the income. When we checked that account which has been linked, saving account or current account which has been linked with the home loan, even that was not charged. So nowhere it was coming, even they were not booking the income. Out of the 4 years, 1 year we got both the bank also and the housing loan department also. We were the auditor for both the cases.
Okay.
Even the same case, same scenario, same bank, the different district. It was not charging any of the housing.
So this is a perfect example of understanding the process and doing the risk assessment. So till the time you don't understand the process, who is supposed to do what? Whether the branch is supposed to charge or a disbursement.
Sent to central auditors, everything, the issues are raised in the third year meeting when the auditors meeting was there. I didn't get answered till date.
It's a clear revenue leakage for the bank and a value add from your side. But it's a clear revenue leakage case where no one is knowing what is their role and responsibility and who is supposed. Generally, it has been recovered by the branch. Disbursement agencies are only doing the disbursement, which are a central process, and branch are supposed to recover the amount, which is a miss and a revenue leakage for the bank. Depends on your materiality. If the amount is not material,
Same thing they are saying, no MOC since amount is not material.
that then a professional judgment comes in. If the amount is really very small,
But small it accumulates for all the loans.
so you have performance materiality, you have opinion.
We get the mails from central auditor also. You don't put it in MOC, you put it in LFAR. And once we put in LFAR, we don't get any answer.
No, that is, I think,
It is booked or not booked. So even next year when we are going for another district and the central auditor is there, he is also a CA. When we asked in the meeting, answer
no, you can definitely raise and ask for the question that this was there, because at a branch level may not be material and you may have taken your professional judgment not to part MOC and only give a LFAR. And if when the statutory auditor, central statutory auditor also does this thing and they come across that, okay, when consolidating everything, still it is not material, they would have taken, okay, will not take the impact but change the process. If it is material, they will definitely take it. So everything comes down to the materiality, because if 1 or 2 accounts impacting 10,000 rupees may not be a material, even consolidating at the bank level, if it is only 1 crore rupee, may not be material for the central. So it totally depends on the materiality. But you can still ask how you have closed and whether, okay, one is materiality, but next year it is not repeating. What are the processes or control which are been put in place? Yes, yes, absolutely. So how much time still I have? 5 minutes. Okay. Overfunding of gold loans. So there are cases we have seen where the loans, the valuation of the gold was been done incorrectly, which resulted into higher valuation and higher disbursement. There are cases where we have seen the disbursement, partial disbursement has been done to the borrower, partial amount is been enjoyed by the employees of the bank branch. So gold loan, I think we have discussed in detail earlier as well. So I will skip some of the points. Rollover we discussed. Yeah, MFI. So as per RBI regulation, household income up to 3 lakh should be only considered for MFI. However, we have seen that there are two different systems. One person has been given a credit card in the same family member who is showing that my income is 5 lakh individually. In MFI, the same family is showing my income is 2.5 lakh. How it is possible? So there are certain policies of certain banks which says that if I am supposed to give a loan to an MFI, the borrower should not enjoy any other facility with the same bank. However, we have seen that there are facilities, not only facilities, those accounts were already an NPA, but been given an MFI loan. Again, leading to how the targets are been set, this all things comes. You apply the same logic throughout, and if the DP is not justifying for last 90 days, you can ask the account to be downgraded. We have done that. We have done that. Drawing power should be there. That means he's enjoying the limits more than what he's eligible. No, 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 sir. Sanction limit is different and drawing power is different. Drawing power, you have 100 rupees sanction limit. Based on certain computation, you need to arrive at a drawing power, which can be more or less than the sanction limit. But your disbursement cannot exceed the drawing power or sanction limit, whichever is lower. So the question is more on the intention of the borrower, right? So there is a process to classify this account as an NPA. It's not that we have come across and we'll ask them to classify. We'll first ask for the justification. What are the reasons when the auditor is doing an audit, the numbers what they are giving, and the actual statement which is submitted. If there are so much of deviation, in the CARO reporting also the auditor would have given that the stock statement which have been submitted are not proper. So you need to take cognizance of all those things. If there are certain reasons which are genuine, that okay, we have considered this, but because of this all entries there are reversal which is coming, and if it is justified, you may take your call that okay, this is fine. But it's a continuous process. Every year you see, or every month if you see, every quarter if it's a listed entity, you see there are material differences and there are no justification, then the question is of the intention rather than making a correct. So IREC norm also says if there are inherent weaknesses. So one is your 90 days criteria and everything, but there are there are some qualitative aspects as well, which are required to be considered basis professional judgment, need to be classified as an NPA. Sorry? Penal interest, because once, yes, it will automatically shoot in, come in. But if the account has become NPA, then the accounting and everything will happen on realization. If you are taking a call that the account is required to be classified as NPA, then penal interest and everything will be on the realization. But yes, if you come across that what they have given is incorrect, you will restore the correct DP. In that case, normal case, yes, there will be all the course of action which in normal case should have been applied will be applied to this particular case. Wholesale, I think I will go to the important point, which is 60-40 bifurcation. So we have seen non-compliances with respect to cases where the requirement is your loan should be bifurcated into 60% WCDL first and then balance 40% into working capital. This was not happening. Unhedged foreign currency exposure, we all, at the branch level, I'm not sure whether we check the provisioning for unhedged foreign currency. We give any certification or it is again a central process. Anyone? So whenever there is a overall exposure of 150 crore and more for a particular borrower, banking exposure, there is a RBI guidelines which says the working capital limit which has been issued, first it will be 60% towards working capital demand loan and balance 40% will be used as a cash credit facility. You need to split that overall into two different portions. WCDL again will be based on for 3 months, 6 months where you need to make a repayment. CC is a continuous churning business. So, sorry? It cannot be 100. So take an example, you have 200 crores, 60% of 200 crore will be disbursed by way of WCDL, mandatorily. And 40% will be used as a cash credit. And this is applicable only for the cases where the overall banking exposure of a borrower is 150 crore plus. Overall banking exposure. When we say exposure, it's fund-based, non-fund-based, everything. This is old circular, sir. I can share with you. This is old circular, and this is not new. Anything unhedged, whether you check those or it is a centralized activity. And we'll skip. Certain NPA-related observations. So co-borrower accounts were not being tagged as an NPA in between month. So as at reporting date, those were being considered as an NPA, but now the automation NPA, as per RBI, the requirement is all the NPA should be identified, classified, and provisioning should be automated. So in that particular course, what are the reasons that in between months, the accounts are not being classified as an, that means there are some automation which are not working properly. Inter-office account is being used to avoid being an NPA. We took the example, the inter-office accounts is been used to give the credit to the borrower, and after some days the reversal entry happens and the DPT again restarts from zero. Inconsistency in asset classification between the principal borrower and, so wherever there are manual interventions, we have seen principal borrower has been downgraded, but the co-borrower still remains as an upgraded. Principal borrower has been upgraded because of payment, however the co-borrower still continues to be an NPA. So such kind of inconsistency has been observed. You can do certain analysis using the unique codes, unique asset unique customer IDs to identify is there any relationship between the two borrowers. If yes, whether the asset classification which is there for the one which is worst is been applied to other borrower as well. Sanction of loan to accounts in compliance. So I will take another 2-3 minutes and conclude. Sanction of loan to accounts not in compliance with GST. So we have seen there are certain accounts which have been disbursed for which the assessment was been done, and those borrowers were liable for GST registration. However, there were no ask, there was no verification which was been done whether the borrower has taken the GST, not taken, then what are the consequences if we give them the loan. Weak collateral, I think I discussed. Original title is normal. These are normal. Yeah, I think last processing fee and valuation charges. Compare with the MITC, that is the standard document which says that your charges will be inclusive of, exclusive of GST. We have come across that the MITC is saying that all the charges are inclusive. However, while collecting from the borrower, they have taken the GST in addition, which in that case the banks are required to refund those to the customers. I think these are normal theory. I think we'll skip. If we have a presentation, you can see those. So after doing all this thing, I think one last slide on the challenges. First challenge is the time, right? But this is not the only challenge. I think there are a number of challenges which will be encountered during the course of, yeah. So first is determining the nature, timing and extent of audit procedure you need to carry. Given the time, you need to be well prepared. You should have a proper planning in place to start your audit. Complex regulation and compliance requirements. The key updates what we discussed during the course of our session. There are lots of such updates which keep on coming, and we need to be thorough with those updates. Expectation of auditors, sir already mentioned. Regulatory expectation, as I mentioned, it's not only the central statutory auditor who will be questioned, it will be you who can be asked the question as well if you are taking any stand on any of the accounts. And many other such problems which will keep on coming, or challenges, which last is the limited time. You have limited time. Sir gave the rationale for the limited time. Now you need to work within that. Key takeaways: banking is a different business. It's a business of taking the risk. It's a regulated entity. Understand the business properly and then plan your audit accordingly. Limited time of audit, hence effective planning is critical. Reporting expectation from SCAs, expectation from audit committee, expectation from regulations. Documentation, important aspect. If you don't document it properly, consider you have not done the audit properly. Regulatory oversight on auditors, we discussed. Thank you very much for patient listening, and sorry to rush through some of the slides. Few one or two questions if any, and then we can conclude. Yes, please. So your conclusion will show how best or how tough auditor you are in that particular case. Pressure from anyone, I think, is not the correct approach, or not the, we should not be under any pressure to take our decision. So financial statements are of banks and branch. Audit report and LFR is your document. If they are not taking the MOC, you qualify. If you believe that this MOC is must, there is no second thought.
So qualifying the auditor's report will also suffice if bank is not ready to pass the MOC, correct?
Yes, absolutely. You need to give all the facts. You need to give the quantum. What is the quantum of that particular MOC? Basis that, let SCA take a call.
Thank you.
You cannot force anyone to do, if they don't want to take the entry. It's your report is your property. You can mention whatever you want to.
Sir, we are running out of time, so we can questions offline. We'll have 5 minutes bio break. Meantime, you can give answers.
Absolutely, sir.
If possible.
Thank
because
you.
we are running out of time, and next speaker is also here. So I'll now request our past convener CA Vijay JM to offer a well-deserved vote of thanks, and then we'll have 5 minutes only bio break.
Good afternoon. Good afternoon, members. It's my pleasant task to propose a well-deserved vote of thanks to our speaker Vineet Jainji, who has taken the verification of advances in a most excellent and lucid manner. He has explained us the various asset qualities, the stress test qualities, which we have to look when we go through the bank branch audit. Sir, we are indeed thankful to you for accepting our invitation. Your presentation was excellent, and you had answered all the queries raised by the member. Now, on behalf of WIRC and VCSE, I propose a well-deserved vote of thanks and request a member to carry out with a loud applause. Thank you.